Good morning, everyone, and welcome to Coffee with Casey, where we talk about what's going on in the real estate market. The first thing I want to talk about is assessments. Everybody got their new assessments. Some people went up crazy high, some people not so much. I'm not sure what the pattern is from Fairfax County, but I'm going to find out. Some people went up 4%. Most went up about 11 or 12%. Some people went up 18 to 20%. So a little crazy out there. I do want to get some visibility on that. But how's that going to affect the value of your home? The answer is it's not, okay? It's not going to affect the value of your home. The marketplace, who buys and sells homes, that's what affects the value of your home. It affects how I price homes. And I'll just give you a glimmer. So if I'm going to take a home and we've got to price that, you have to price it apples to apples, right? So you have 5 homes that sold. If they're all showing their 222 assessments and their percentage of assessment of the 2022 assessment, then you have to drop your assessment back to 2022 and compare it from there. So is it a pain in the ass for Kevin and I to do all this? Absolutely. So for 30 days a year, maybe 45 days a year, our job becomes a lot tougher, but it has to be done. Because if your price is here and all of a sudden your assessment jumps way up here, your house value doesn't jump up. The market didn't say that, right? So we still compare apples to apples. All right. So that takes the how does the tax assessment affect my value? Does not. Now, after 45 days, now everybody's starting to show what their sales price was compared to their 2023 assessment. That's when we let it roll and just convert everything over to 2023. But for now, still comparing against 2022. Loudoun counties is still not even showing up on their properties, so their period hasn't even begun yet. But don't freak out. What's the problem? If they overassessed your property 18 to 20%, there's a procedure for filing an appeal of your tax record, right? Of your tax assessment. So that's a Fairfax County thing. You can appeal with them, but I will be bringing a tax assessor on with me. And we're going to start talking about why someone up 4%, someone up 20%. As a person that watches the market every day, and we're going to do it again today, I don't get it. I don't understand. I had a house, $1.5 million house, go up $258,000 on their tax assessment. I have no idea. We're getting ready to go on the market. I'm going to show you that house here in a few minutes, and we'll take a look at it. Okay, let's talk about another thing. Exclusive listings. Some people, I don't want people in my house. I don't want neighbors. Screw the neighbors. Forget about the neighbors. You don't want your neighbors to cost you $200,000 or $300,000, right? Couldn't care less about neighbors. In fact, I get some pretty good feedback from neighbors. They don't kill a deal. They're not our enemy, okay? I know that we may have some bad relationships with neighbors, but I don't want to do an exclusive listing. Like one gentleman I know, he's going to sell his house and he's going to get about $200,000 or $300,000 less than he should, okay? I'm going to show you an example of this in a couple seconds. I'll show you an example of exactly what I'm talking about. But the object of selling a house is to get it exposed to as many people as possible. Now, most realtors go with their MLS, which will take you to this far. They'll expose it. Maybe they'll send it to friends and family on Facebook, and it goes to this far. Okay. Well, geofencing and Google ads, if you do this right, will take it this far. And not only that, but the people from here out are going to pay more money for the house. So this market is massively more powerful than this market. And we'll talk about that. I have talked about it. So our job is to open it up to the masses, let everybody have a chance to look at it. How many times have we heard, my friend sold their house in the first day, contract came in, full price, blah, blah, blah. Full price, well, last year, our average home sold at $141,000 above list price, right? So we don't want to throw that money away. The proper procedure is not the exclusive, because let me show you this. So let's say this is, and I'll show you a chart here in a minute. So let's say the market is this big if we expose it to everybody. And Compass or Keller Williams have exclusive deals with just exclusive to the agents, to the company. Why do they do that? because they want to sell it inside their own company. They make more money. You don't. They're preying on your privacy concerns. They're preying on that. So they make more money. Bad for the seller, great for Compass or Keller Williams. I'm totally anti that. At least you open it up to the whole market. Then you open it up to this market. This is the market, not this. This is an exclusive listing. I had a person, everybody's bragging about, oh, they got $2.2 million. Didn't even have to put it on the market. Well, it could probably sell for $300,000 more than that. I'm going to show you that house here in a minute. Okay. So I don't want to hear about this exclusive. This is very bad for sellers. This is very good for sellers. Okay. So anytime you hear the word anytime you hear a realtor say exclusive, think to yourself, you're trying to sell it yourself or sell it within your own company. That's just wrong. I mean, I spent my whole career trying to figure out how to open that, to get wider and wider and wider. And they're like, let's just sell it. If my own agent has a client that wants one of my listings, we'll see you on Sunday or see you on Monday when the contracts are due. Will not allow an agent in my company to contract on one of my listings. My team, forget the company, my team. If my daughter had a buyer, she's got to wait till Monday. Okay. Because I'm not trying to do what's in the best interest of my daughter. Maybe I should, but I'm trying to do what's in the best interest of the sellers. And that's what we do. Okay. Maybe I'm a bad father. I don't know. Probably. Good listing agent. Maybe not great father. All right. So that's as far as the exclusives are concerned. And whenever you hear that, let me tell you what's at risk. Okay. I'm going to show you some things here in a minute where we're going to look at what the risk is of a house. So you're going to put your house on the market. Well, what really is the risk? Well, any realtor can put it on. Not really. Some people are going to get $150,000 over their customary value. Some people are going to get $150,000 under customary value. So what's really at risk? $300,000. There's $300,000 risk. Let's just say there's 10% up or 10% down. That's the risk when you sell a house. If you misprice it, if you underprepare it, if an agent comes in and goes, oh, you want 1.7, let's go 1.7. Nah, you don't have to fix anything. Just give me the listing. Here's the key phrase for realtors. Just get a sign in the yard and let's go. That's why 40% of the homes withdraw unsold. I'll show you an example of that here in a minute too. All right. Last thing. There are some markets that are converting over to buyer markets. And I said, watch the inventory, watch the inventory. That's why we're here. Watch the inventory. There are markets that are merging into buyer markets as we speak. All right. So let's stop talking about it. Let's start giving examples on it. All right. Let me take you on my screen. Let me get back to where you guys are. Let's share my screen. Let's go over here to the market snapshot. All right. So let's take a look at some of the markets. So we follow Fairfax County, Loudoun County, and Prince William County. So let's take a look. I've got a house that's coming on in this market right here. So here's Vienna New Homes, Oakton, and each one of these is really, I got to tell you, they're extremely fascinating and they're an incredible tool for realtors, listing agents, selling agents, buyers, and sellers. This gives you a snapshot of exactly what this market is doing at this time. So we're between 1.5 and 1.75 in Vienna. The average home is about 3,600 square feet, built in about 2000. So we look down here. These are the ones that are sold. Okay. So these are the homes that we're actually, using as our model to determine the customary value. So here you've got the age and the size and the lot size, assessment, list price, customary value. This is what they're asking. This is what I think the home and customary value is worth. And then here's what they sold for. So let me give you a quick lesson on customary value. The customary value is the middle point of the teeter-totter. It's dead in the middle of prices. Now, some prices go up because they had a good strategy and they prepared their home and they had upgrades and the condition was great. Some homes go down because they were either overpriced. They went into a pricing death spiral. They were not prepared correctly. They were not marketed correctly. So as you can see here, these homes between 1.25, 1.75, these sales, some sold above the customary value. That's 120,000 above customary value. So this home on Cottage was well presented, well priced, and well done. Look at this down here, 163,000. So what I'm saying is, here's your list price. It should have been this. It sold for 1.435. That's the eventual list price. They had to drop it. And they got 163,000 under customary value. So the difference between the sellers on Cottage and the sellers in Kentstale is $285,000. Remember I said the difference between doing it right and wrong is 300,000, right? The bigger the house gets, the more that spread happens. And I'll tell you why. There's not much you can do to a townhouse. And you might have nice countertops or in good condition or a nice paint job. But there's not an extraordinary amount of money you can put in the backyard, or, you could update the house. A lot of bigger houses are not updated, and they're going to get less money. And the ones that are updated are going to get more money. So this spread starts to really spread once you get to the higher price homes. But if we look at this market, let's talk about analyzing a market. Remember I said inventory is what you got to keep an eye on. So these are closed. These are coming soon. These are active, and these are under contract. Now, A/C means active with a contract. Active means they probably are depending on them to sell their house, so it's contingent on the sale of another person's home. So these are still active. So that's why they're in red. So look at the homes that are coming on the market. Now we've got two pending. That means they're definitely under contract. They're not coming off, right? Look how fast they sold. But look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 homes coming on the market. In the last 10 days, 10 homes have come on the market in this grouping right here. And by Cary not going under, I'm looking at Cary going, well, that's 8 days. That should have gone under market. But look at here. It's 160,000 over what I say it's worth. So it's either got some incredible conditions and upgrades, or it's overpriced, one or the other. Well, by it not going over, I'm kind of thinking you don't have the upgrades and condition to warrant that extra money, right? So when I have a buyer and we're going out, so let's take a look at, in this case, I'm a seller, okay? So my listing is Hidden Oaks Court, right? Now, this is an incredible house. It's got a lot of upgrades in it, but see all these? We saw that coming. Look at it. You see it all. So you put the house lower so you're more competitive, and then let them bid it up, right? So we want to get as many people in that door as humanly possible. When we see this, is it 1.55 or 1.5? Well, the buyer pool under 1.5 is twice as big, So when we see this coming, it's like, uh-oh, that's a red flag. See the red? That's a red flag, right? So we got a little red flag going. We need to get this, dip this under, where am I? I'm here. We need to dip it under. That's another one, sorry. Here I am right here. We need to dip it under 1.5 million, which doubled the buyer pool, gives her a much better chance of selling that house, okay? And get up where our price should be. But I'm going to tell you, and I warn every seller, and I'm warning everybody every week, the number one thing you need to watch out for is inventory, right? So when I'm analyzing this market, I'm saying to myself, you can't get aggressive. You can't mess around. You need the biggest buyer pool you can. We tested one over 1.5, did not test well. Let's get under 1.5 and let's test it there. Let's double our buyer pool and let's go from there. This is going to come on the market tomorrow, and watch how fast that goes under contract now that it's priced where it should be. If we left it up higher, we would have heard crickets, never would have sold. It would have gone into its pricing death spiral. Before you know it, it sold for a great deal less than it's worth. So this is how you use these tools. And we have one for all these markets, but as far as this market is concerned, I need to change that because it's gone from a seller's market to a buyer's market. That's a buyer's market. So let's look at, you got, Centerville in here. And real quick, if you look at some of these markets, you can see that you've got some coming soons, only two active, right? They're both overpriced, considerably overpriced. So really, and look at all the pendings and actives, active under contract. So we've got a lot pending. We have two active. They're both overpriced. So is this a buyer's market? No, it's still a seller's market. If somebody comes on with a reasonably priced house, it's going to fly off the market. So we can get a little more aggressive when we're dealing with something in this market. So let's go back and let me show you one that kind of shocked me a little bit. Let's go to Loudoun County. This is Western Loudoun County. Let me go for a little higher price houses here. This is over $1 million. So these homes are over $1 million in Western Loudoun County. Kelly's got to get more busy out there because this is ridiculous. All right. So we've got 4 closed in the past 100 days. We have 3 active under contract, active with contracts. So basically there's no pending homes on the market right now. 6 of these buyers can go after, no pending homes. Look at the withdrawals and expireds. 2, 4, 6, 8, 10, 12, 13. 13 homes withdrew or expired, 4 sold, 6 on the market. See all the red? Yeah, that's a problem, right? So, what's going on? Why in the heck is this happening, right? Well, it could be, and it's just a hunch, that most companies allowed people to work from the house, and everybody fled to the Western counties and thought that was great. And now they're making a lot of people come back. So maybe, possibly, we're monitoring it very closely. Are the buyer pools a little smaller out there now? Are they smaller out in Western Loudoun County or Prince William County? So we're keeping an eye on all of it. Right now, it's just a hunch that people are making them come back to work. And one at a time, the companies are making that decision. Now, a company wants their employees to come back to work, but they're competing with other companies for good employees. So, they have to let them stay home. But as more companies force people to come back in to the office, then it's going to give them a little more power to start everybody switching and getting their people to come back in the office. So it's just a hunch. But if I was listing a house in this market, I would be extremely cautious about getting too aggressive on putting a house on the market. There's nothing under contract. I mean, look at these expireds and withdrawals. Let's take a look at another one. I'm going to show you. Remember, I told you that that exclusiveness could cost you money. All right. So here's a home that we have coming on the market right now. This is Expedition. This is an incredible house with about $500,000 in the backyard. Its customary value is 1.245, but they've got $500,000 in the backyard. So this thing is going to sell over 1.25 million. It's coming on the market. This home right here, Brendan Hall, right? Everybody's bragging. That home sold without even going on the market. Well, look at what its customary value is, 2.35. Now look at Cameron Walk here. Cameron Walk went on the market and sold 200,000 more than their customary value. 200,000 more than that customary value. It's 2.5 million. So in my opinion, and I told my seller and Ferris out at Expedition that I think your home is worth more, but I think that off the market sale hurts you. I think it absolutely hurts you. They did it without exposing it to the market. There you go. There's your exclusive sale. Now, is this agent a hero that did this or a goat? Right? GOAT just means, I think sometimes agents hurt neighborhoods by maybe selling it themselves or selling it off the market for a lower price. Then it brings everybody down. Well, if that sold for 2.2, why am I paying this 2.5 for your house? Well, because that was really a 2.4, $2.5 million house. And the agent got greedy and took it for themselves. I'm not anti making money. I mean, I'm not anti making money, but there's a protocol in real estate. And the protocol is the most exposure you can give to a property, the highest dollar. The more you get people to bid. You give me 2 people bidding, give me 1 person who thinks they're bidding. I had 1 person who come in at 1.4. Just the thought that it was the first weekend and there was possibly other bids coming in, just the thought of it made them raise their bid from 1.4, which was the list price, to 1.55, which is $150,000 profit for the sellers. Just thinking that there may be possibly other bids coming in. So our job in real estate, right? Our job is to know the market. When we're putting things in, apply all rules. And you can go around some, here's some really good market. Apply all your rules and go. So let's say I'm a buyer, right? And I'm looking at this market. I'm all in. I'm all in on that market right now. If I'm thinking about buying a home in a $1.5, $1.6 million range, you are now in a buyer's market. Get out and go. Now, if in some other markets, if there's nothing on the market and you're looking at this, maybe that's not the time. Maybe 2 weeks ago, when none of this was on the market, maybe that was the time to go out. It was not the time to go out and look, but it is now. See how I'm saying? Markets can change in 1 week from a seller's market, tight seller's market, to a buyer's market. 1 week. And the longer we wait to put homes on the market, the more this kind of thing is going to happen, right? So we're trying to get them on as fast as we can. We're working as hard as we can. We're trying to get Sergio's house on the market. We're trying to get everybody's house on the market because we're trying to hit it before, we start getting a lot of inventory. So let's take a look over that and look at those homes over 1.75 million in Vienna. 2 actives, 2 under contracts, no coming soons. So this market is a stable market, right? I'd probably call that a neutral market. All right. But watch this. Let's say I'm looking for $2 million. $2 million house. Look at the actives in the new homes. This is the new home market in Vienna between 2 million and 2.25. Look at all the actives. There's only 1 coming soon, and there's 2 pendings. So this is clearly a buyer's market, strong buyer's market in the new homes. Let's go down to the smaller group of new homes. This is 1.75 to 2 million. Holy geez. Look at all the actives on that one. Now, look at the pendings. So good homes are selling. Good homes are selling, but there's a lot of homes on the market. And look, you've got 4 coming soons right now in that new home. So, the bottom line is, and I don't want to look at, you can look at specific markets. What do you care about Fairfax County? You only care about Lakeville, or you only care about, your market. You only care about homes that are within $150,000 of your house. We can do that. So anytime I'm sitting down with a seller, we'll sit down. And the first thing we need to do is know what kind of market we're in. What is the customary value? What kind of upgrades and condition? And if it's here, what can we do to the house to make the condition and upgrades go up without spending a lot of money? By spending $1 by getting a return of $7 for every $1 invested, we can get that thing to go up like this. So the key here is know your customary value, know yourself, and don't lie. If your home is not worth what it is, you got to be realistic. You have to look at the market conditions both now and right before you go on the market. So here's what we do. We look at it and say, look, don't get married to this number at every listing point. Don't get married to that number. When we hit the market, we're going to go coming soon. We'll decide on a number then. We'll go coming soon for 7 days. We'll see who likes it, loves it, how big the buyer pool is. And if we have plenty of love, we launch it. Like that $2.5 million house, plenty of love, plenty of love. plenty of agents that want to see it and are begging, asking contract questions. So we didn't have to drop the price on that one. But on Hidden Oaks, we did. Why? Got a lot of houses just came on the market. What a shock. So we need to adjust, right? So we weren't feeling the love. We are feeling the love at 1.5. So when you come in, don't get married to the price. Just know your net values, know the market, know what you can do to increase your value. And then right before you launch, that's when you lock in the price. And that is why 92% of our homes sell within that first week when people are doing crazy things like bidding houses up. Now, when you're pricing houses, I don't have a ton of agents that listen to this, but I do have a lot of agents. I do have agents that listen to this. If you have a home over $1 million, send me the address. I'll price it for you. I'll do a market snapshot for you. Okay. I'll do it for you. No charge. Send me the address, put my pricing team on it. Let me tell you why. We had 70, you got to be a Samson Properties agent and you got to use Cardinal Title. If you're not using Cardinal Title, which is best title group going, forget about it. Samson Properties had $70 million of listings over $1 million withdraw since June. Now that is not just a Samson issue. That's a market issue. There's 40-50% of homes over $1 million withdrew unsold. They're incorrectly priced, right? Just proved it. We had one home that was 2.65. It should have been under 2.5. We got under 2.5. It went under contract. It was on the market for 100 days. Once we got under 2.5, it went under contract. We have a home that was on for 1.35. That's not what it's worth. We dropped the price. Tried to sell twice, couldn't. Price is too high. Over 1.35. We bring that thing down to a good number, right? We haven't launched it yet, but they've already had sight unseen contracts for $100,000 over list price with no contingencies. Samson Property agents that use Cardinal Title, send me the listing, whether you've listed it or not. I want you to send me the address. I'd be happy if you're a listener here and you're a Samson agent and you use Cardinal Title, I'd be happy to help you out. Okay, I got plenty of time. So send it to Casey at CaseySamson.com or text it to my cell phone number 703-508-2535. I'd be happy to help. If you're looking to buy and sell in Northern Virginia, give us a call. 703-508-2535. We'll see you all next week. Bye now.